Ms. Robertson.
Good afternoon. My name is Sally Robertson, and I'm a board member of the National Association of Development Companies. Additionally, I'm the president of Business Finance Group. It's a Virginia-based nonprofit provider of SBA 504 loans. 504 is a public-private partnership that leverages 40% federal loan guarantees to induce commercial lenders to provide 50% financing for long-term commercial real estate projects. Those projects are job creators and are done at no cost to the federal government. I'm pleased to provide comments this afternoon on the state of commercial real estate lending and the need to improve access to capital for small businesses. NADCO applauds both committees for examining CRA issues before the pending crisis overtakes us. Independent studies by Deutsche Bank, Credit Suisse, and the Congressional Oversight Panel reveal that at least $1.4 trillion in CRE will mature in the next 5 years. Of this, about $750 billion is held by small and medium community banks, representing as much as 300% of their main capital and reserves. The recession and pressures from bank regulators have forced smaller banks to focus on rebuilding capital rather than on making small business loans. The loss of the CMBS market for the sale of CRE loans has added to the liquidity issues for those banks. If steps are not taken soon, the rate of bank failures is predicted to increase as the crisis worsens. Without capital, even successful businesses cannot grow. Without new sources of long-term capital, businesses that cannot refinance their commercial homes will risk shutting their doors, adding their employees to the ranks of the unemployed. One of the larger loans we've done is for a second-generation commercial laundry facility. The project financed the equipment while the borrower financed the building through a conduit, as the equipment loan maxed out their SBA availability. The conduit will mature shortly, and if a renewal is not available conventionally, our business may fail since the equipment cannot be readily moved, causing the loss of 131 jobs. Through 2 rounds of stimulus, Congress and the administration have worked hard to put more fixed asset financing and working capital into the hands of small businesses. 50% increase in 504 volume through January 31st of this fiscal year over last fiscal year speaks to its success, but the current stimulus package is ending. An extension of the stimulus provisions is critical to access to capital for small business and has been supported by 80 organizations in a letter to Congress. But we must all do more to expand capital sources and induce community banks to get back in the lending business. We believe that many small businesses either need access to larger guaranteed amounts or have already used up their allocated maximum for 504 under current law. The Credit Suisse study cited above indicates that the majority of CMBS loans coming due are between $2 and $5 million, demonstrating a disproportionate impact on small business. And the current loan size limits are frequently too low to assist many successful small businesses that can expand and create the most new jobs. We recognize the House Small Business Committee for passing H.R. 3854, an SBA Programs Reauthorization Bill with numerous beneficial program changes. Foremost among these changes is the proposal to increase the maximum 504 loan size from $1.5 million to $3 million, and the limit for critical public policy loans would increase from $2 million to $4 million. However, the expanding CRE financial crisis has increased the demands for capital beyond the House-passed new 504 loan limits. As President Obama has advocated and 80 small business and lending associations have endorsed, we support the urgent need to provide even greater levels of capital access to healthy growing small businesses. As stated in H.R. 4302, we urge support for a total credit limit to a single borrower of $5 million for regular 504 projects and public policy projects, and a $5.5 million limit for manufacturers and energy-efficient projects. Our industry also strongly recommends that the committee support H.R. 4302 for the proposed temporary expansion of 504 refinancing provisions. There are 3 distinct needs, each of which affects the jobs outlook. Maturing debt. Small businesses, even those who can make their payments, may be unable to renew their loans for their business real estate, which could lead to foreclosure. Using 504 to attract a commercial lender to the refinancing project could save those jobs. High-cost debt. Many small businesses have older loans done when rates were high. By refinancing these loans at today's lower interest rates, the savings on debt costs can be used to expand inventories and hire more workers. Access locked-up real estate equity. In spite of the decline in real estate values, many small firms still have significant equity in their business real estate. Refinancing those existing mortgages while providing them with more operating cash will enable them to reinvest it in their business operations, expand, and create jobs for their communities. Again, thank you for the opportunity, and I look forward to your questions.